Hello, and welcome to our latest Finovate webinar. I'm David Penn, Research Analyst with Finovate. Our topic for today is digital identity, Fintech's key to unlocking growth. In today's digital-first environment, fraud threats are growing in sophistication and in scope. And the risks for online and financial crime have only intensified. At the same time, Fintechs are prioritizing growth and need to do so in a way that's safe, secure, and keeps bad actors out. In this webinar, our panelists will explore the meaning of digital identity, how Fintechs can leverage identity proofing strategies to position themselves for growth without diminishing security. Leading our discussion for today are Kathleen Peters, she is the Chief Innovation Officer with Experian, and Brian Duke, he's the Vice President of Data Science with Prism Data. Thank you both for joining us. So let's go ahead and get started. First, could you each tell us a little bit about yourselves, the work you do, and the company you represent? Perhaps, Kathleen, we would start with you first.
Thanks, David. It's great to be with everyone today. My name is Kathleen Peters, and as mentioned, I'm with Experian, where I lead an innovation and strategy team looking at next-generation solutions to our clients' most challenging problems. I think many of you know Experian. At Experian, we are creating solutions that really help our clients connect with consumers in more meaningful and personalized and, of course, secure ways. As consumers, millions of us engage with Experian every day, whether it's to boost our credit score, protect our identity, or more. So really delighted to have the chance to speak with you today.
Fantastic, Kathleen. And Brian, yourself.
Yeah, hi, I'm Brian Duke. I lead data science at Prism Data and Pedal Card, which is a fintech that some of you might have heard of. I've been a data scientist for a little over 20 years, since before it was, I guess, sexy to call us data scientists. We used to just be called statisticians. And most of my time's been spent fighting fraud, either helping stop transactional fraud, on credit cards and debit cards, or helping to identify fraudsters who are applying for loans. Specifically here at Prism and Pedal, we're utilizing, kind of an alternative data source, someone's cash flow, to help underwrite or detect some of this fraud, and excited to talk to everyone today about some of our experiences.
Great. Thanks for that, Brian. I'm really looking forward to our conversation where we're going to be talking a lot more about the fraud landscape and what we're seeing going on in this space today as we talk about trends and what are the tools that are most effective and useful to fintechs, and ways that Experian and others can partner to be able to provide those insights to not only stop fraud, but to recognize those customers that are the good customers with good intent and give them the best experience possible. There's certainly been a lot going on in terms of the overall landscape. Definitely one of the things that we've seen is that fraud is absolutely not slowing down. If anything, we know that the fraudsters continue to be opportunistic and they are adapting to the latest changes in the landscape. One of the ways that I like to think about fraudsters and the way that they are very organized in how they're approaching what they do, it's almost like a business. And if you consider the last couple years and with everything that was going on during the pandemic, these businesses are very well funded. It may not be a way of thinking about it that we're used to, but if you consider as the various types of stimulus were coming into the US economy in particular, fraudsters are opportunistic and they took full advantage of that cash flow that the US government was using to try and stimulate the economy and keep us rolling and strong during the pandemic. As a result, a lot of these fraudulent enterprises are flush with cash, and they've been using that to more systematically think about their approaches and scams and frauds. And that is something that we are definitely seeing in terms of an increase in fraud as we look across the broader macroeconomic landscape. The other thing that's happening is we certainly see that there are more consumers than ever that are transacting online. I'm really glad to have you here, Brian, to talk with us too about fintechs and the way that consumers have embraced this digital experience more than ever. We have a statistic that we're sharing here on the slide, which is from Experian Research, that in the past, for example, there have been digital journeys that customers could take if they wanted to open a new account or apply for a card or engage with a business. Sometimes if that journey would break down, the message would be, please come visit us at our branch or at our store. 80% of the consumers that we've spoken to just this year have said they will abandon any attempt if the result is, I need to get up and go to the store. Across all demographics, the digital engagement and those digital journeys are definitely being embraced. I assume that you're seeing something similar, Brian.
Yeah, that's completely true. I think especially for fintechs, where the vast majority of us don't have branches or physical presence because we're working with partner or sponsor banks. So it's even more imperative for us in the fintech ecosystem to embrace digital first. Like, we don't have a large operations team. We don't have any physical presence anywhere. So it's necessary for us to do all of our fraud checks, all of our customer interaction digitally primarily, so that we can service those consumers who are making that journey themselves.
That makes a lot of sense. I think that as so many consumers have started to embrace these kinds of digital and online journeys, sometimes out of necessity, sometimes out of convenience, or they want to pursue a new way of engaging, such as applying for a pedal card instead of maybe a traditional financial instrument. We find that they are preferring that type of engagement, but also it creates a whole new demographic of consumers who aren't as familiar with what it means and what it looks like to engage online. A perfect example, I think there are certain folks that maybe during 2020, when things were shut down, they needed to start doing all of their banking online or all of their shopping online. As a result, they may not be accustomed to the emails and communications that might come from their financial institution. Because they're less familiar, they are more susceptible then to scams. So we've definitely been seeing an uptick in our client base in terms of consumer scams. And it feels like doing some education for consumers and helping them recognize what that might look like could be part of the solution. What do you think?
Yeah, I definitely agree. If you think back to when there was no online presence, for me, I can remember back 15 years ago, 20 years ago, something like that. Your concept of identity was walking into your branch and either swiping your debit card or showing your physical identification to say, hey, this is me, I am Brian Duke. But we all have to recognize that that takes on a completely different meaning. Proving who I am and that I'm a real person has a completely different meaning online, right? I could go to a website and I know Kathleen's email, we're interacting in this webinar together, or David's email. I can pretend that I'm Kathleen without significant amount of effort. So just saying you are and maybe showing one proof of identification is insufficient. And that's a big journey for a lot of consumers to make. So I think to minimize that friction, we have to do a lot of things as fintechs and as service providers behind the scenes to help them, one, through that educational journey, and second, to minimize the amount of disruption that we place on consumers. So by doing things like checking someone's IP address, checking and verifying all of the different aspects of identity, and maybe broadening the picture of what that identity really encompasses, not just my picture, my name, my address, but what devices am I using? What kinds of bank accounts am I using? Getting a complete perspective of what a person is helps us to get a picture of, yes, I'm doing business with the person who is purportedly Brian and is actually Brian.
Great advice, and I think we'll talk about that more as we're going through things, Brian, too. Each year, as you're aware, Experian surveys consumers and businesses, and we publish our annual Experian Global Identity and Fraud Report. And for those in the audience, that report is available if you go to Experian.com, or if you search just the Experian Global Identity and Fraud Report, you'll be able to download a free copy of that report. We've been issuing that report for, I believe, 7 to 8 years now. So we've also seen some interesting trending that's occurred over time. One of the statistics from this year's report, which we released in June, you'll see here on the right-hand side of the slide, where 90% of the businesses that we've spoken to just this past year are prioritizing both their digital acquisition journeys, but also very conscious about increasing their fraud spend. It's an interesting aspect, isn't it, in terms of fintechs. So many of the fintechs that we see, Brian, are VC-backed. They're very, very focused on growth. And sometimes staffing up a fraud team may not be the highest priority or the first thing that is established when business gets going.
Yeah, I can say, that's been our experience to an extent here at Petal. Is on the Petal Card side of our business, it's when you're being pushed by venture capitalists and your message is grow at all costs. Things like putting a little bit of friction or reviewing applicants and making sure they are who they say they are, or that they don't intend to defraud you, or that transaction or that dispute is genuine. That's probably a lower priority than initiatives that are going to grow the customer funnel more and more. But what we found is that, especially facing, I think we're all pretty much expecting some kind of economic downturn in the next 6 to 12 months. When that happens, Kathleen said it up front, fraudsters run this like a business. And I always joke that, they've got to pay their mortgage too. Well, they're probably not making a mortgage. They're probably buying drugs or guns or something like that, dangerous. But, they're running it like a business just like we are. And, they're going to want to maintain their revenue stream in an economic downturn, just as I want to maintain my revenue stream. So in a way, we have to get, if there's fewer legitimate applicants and there's probably the same amount of fraud activity, we have to get a little bit more careful with who we're onboarding. And so this brings to light, we need to double down on making sure our operations staff is properly resourced so that they can identify different fraud attacks, being able to respond to them quickly and differentiate between different types of attacks, and have the tools that they need. So now is the time, in our opinion, and now is the time to make those investments so that you're not caught flat-footed when an economic slowdown and typical increase in fraud rates occurs over the next year or so.
Yeah, I think getting that mix is right, isn't it? Because we don't want to inconvenience all the consumers in an overly heavy way when most of them are coming to fintechs or coming to a digital channel because they're expecting convenience. They're expecting that Amazon-like experience, right? So how do we maintain that differentiation, that great experience, while also making sure we're mindful of what's fraud and getting that balance right? I'm sharing here on the screen a few different types of fraud and how we think about how it's evolved over time. I mentioned the pandemic, and in 2020, we saw a lot of the fraudsters, very opportunistic, going right after different types of stimulus and benefits programs. That was just the latest incarnation. I think what we're seeing now, too, is a lot of the traditional banking fraud is coming back. They're well-funded, they're ready to go, they're applying traditional types of schemes and methods to this new economy. I think it's worthwhile to just give a little look to how fraud has evolved, what things are the same, and what might be new as well. And I appreciate your thoughts as we kind of get into some of the most recent types of attacks too, Brian, as we think about that. I mean, historically, back in the day, 15 plus years ago, the types of credential harvesting that come from phishing attacks, malware on our systems, looking for different types of authentication. It may surprise some to realize that the one-time password, the OTP, those text messages we get to our phones to authenticate, have actually been around for a long time. And they were some of the ways that we would authenticate and try to prevent what might be the impersonation or stolen identity that might be happening as we try to engage. Later, as the fraudsters became a bit more sophisticated in hiding what they were doing, we would see man-in-the-middle session attacks, where the fraudster would silently watch between two parties in a transaction, harvest information there, and intercept things like wire transfers. And so to protect ourselves against that as consumers, we might have some anti-malware solutions that we would download to our computers, and other types of cybersecurity solutions. But then, of course, as we zoom ahead now to 2022, and even for the last several years, we know that there's new types of fraud that are presenting themselves, different types of account takeover, different types of impersonation, and even emulation of the device that's occurring. People can spoof the phone number of the device that looks like it's coming from. Synthetic IDs, where it's not even a real person behind the attack or a real identity. Brian, what are some of the types of fraud that you are seeing in Prism's business in terms of what you're really focused on and you think maybe is on the rise now as compared to a couple years ago or even 5 years ago?
So before I answer, I'm going to go back to something that you were talking about on that fraud report a minute ago. I remember I myself am a consumer of that. I regularly read it. And one of the things I noticed a few years ago was talking about consumers' expectations. And one of the survey questions was about, what do consumers expect? And I think over time, we've seen a migration of what consumer expectations are. I think most consumers at this point know about things like cookies. They know that you're monitoring them and looking at where they're logging in from. So, if you're not using some of those techniques, you're way behind even what the consumer perceives, right? So, and the other thing that I remember reading about was a lot of consumers understand friction when you can explain why it's there, right? So, having friction for friction's sake is a terrible idea. But if you're saying, if you explain to the customer, hey, you're logging in from an IP address that looks like it's out of the country. We saw a whole bunch of things come from the same country recently. It looks a little suspicious to us. Consumers understand why they're being prompted for extra things, and they're sometimes happy with it if they get a feeling of why. So we've found that a lot of the trouble is in the messaging. Like, hey, we're reminding people that we're asking you for this for your safety and security. And that messaging, at least with, on the pedal card side, we deal a lot with new to credit folks or credit rebuilders. And so reminding them, they're new to this journey. And so reminding them of why we're asking them to link their bank account or why we're asking them to take a selfie. Hey, this is for your protection. We need a little bit of information to make sure that you are who you say you are. You're going to pay us back, all these reasons. We feel that there's a really strong message there, and it helps us quite a bit.
That transparency and those visible signs of security, they are so meaningful, aren't they? I mean, you're right. Yeah. Consumers are more educated than they have ever been. I know you and I were talking about this when we saw each other at Money 2020. Yeah. Consumers are aware of what's going on. In fact, in our most recent report, as you were mentioning, one of the statistics that was in there that I found personally surprising was that 70% of the consumers that we spoke to, and this year we surveyed almost 7,000 consumers for our survey, 70% said that they were either themselves a victim of identity theft or they knew someone personally who was. That is a huge number. So to your point, consumers want to feel secure. It's getting that balance right and that transparency that shows, hey, don't worry, we've got you, we're protecting you, I think is really a best practice. Not too much, not too heavy-handed, right? But that transparency so that people know that they're safe and they can trust. I think that's really, really good for business.
Yeah, I can give you an example. You asked about what types of fraud are we seeing increase. And you mentioned OTP as kind of an older method. It still works, if you use it right, but it can also be dangerous if you don't. I can say when we first rolled out OTP as a defense mechanism for people logging into our app, we were a little heavy-handed initially, and we just said, well, anytime you log in, you have to OTP. And, let's be honest, that's a little bit ridiculous. And consumers called us on it, on the pedal card side. When we thought about it a little bit more, we're like, hey, you know what? We can monitor this person's device. We have that intelligence. And honestly, the consumers expect us to have that intelligence. If we know that Brian's logging in from his house and every day he's logging in from the same place, I probably don't need to ask him for that defense every time. But if I see him logging in at a place, a country, a state, far from home, at a bizarre time of day, things like that, then, extra defenses make perfect sense. And, I think most consumers would look at that and say, well, it is 2 o'clock in the morning in, Azerbaijan and, all of these things. It makes sense that it's kind of out of character for my pattern. So, as a data scientist, this is a really cool problem to work on. We can look at, the normal consumer behaviors, what this person does and what they don't do, and try to defend against these different types of attacks. To the different types of attacks we're seeing, we're seeing a lot of the manipulation of some of those older defenses like OTP and device, where, there are fraudsters who will definitely attempt to socially engineer their way through OTP by, stealing some consumer data or putting themselves in the middle of that message so that they can intercept that OTP. Or we've seen fraudsters go as far as attempting to intercept an OTP or attempting to call a consumer and say, hey, I'm so-and-so from your bank, your credit card issuer, and I need that OTP. We try to educate our consumers that that's not a good thing to do, but some of them are going to fall victim, and you still have to have defenses beyond just that OTP to catch when people fall victims. We took our internally security training a couple weeks ago, and the message was, hey, we're all going to fall victim to phishing at some point. You're going to click on a link or something. And I think we have to remember that all consumers are going to do it. We can educate ourselves as much as we want, but we need a lot of other defenses to help protect against it, whether it's identity theft, or whether it's synthetic identity creation, or whether it's some kind of first-party fraud attack where, I am who I say I am, but I'm at my wit's end, and I'm not going to pay you back, or I'm going to dispute transactions or whatever. We have to have different defenses for all of those different types of attacks.
Well, you bring up a really good point, Brian, and not all fraud is the same, right? And so not all tools, models, scoring techniques work the same. And I think just trying to use sort of a blunt instrument and hoping that stops all our fraud is not going to work, right? I know you've spent a lot of time kind of parsing out what those different types of fraud are. And I think you provided us with a slide too that I'll share with our audience from Prism. Do you want to walk through the definitions and how you're thinking about these different types of fraud? It's very similar to what we're seeing as well. And we can talk about this some more.
Sure. So to give a little bit of background, Prism is a company that we're taking some cash flow based underwriting technology and selling our scores to other businesses so that they can also underwrite people, not just with credit data, but also with a consumer's bank account information. And that can be used for a variety of cases. In this case, we're talking about fraud, but we consider on the pedal side of the business or at Prism, there to be, when you're establishing a relationship with someone, there's a couple key questions you ask. I like to say there's 4 key questions. 3 of them have to do with fraud. One is, is this a real person? You know, is this a actual person, or is it a figment of someone's imagination? If it's a figment, we call that a synthetic identity. The second question is, if it's a real person, is that person who he or she says he or she is? So, you know, to my previous example, I can pretend I'm Kathleen, but I'm not Kathleen. And then the third one is what we call first party or misuse of the credit you're granting. Like, just because I am who I say I am and I'm a real person doesn't mean I'm not intending to defraud you in some way. And a lot of times this manifests itself in people who are close to the end of their rope, whether it's, you know, they know they're going to declare bankruptcy soon, or there was a big story in the news a couple months ago about a daughter and mother who were just making large purchases at expensive retailers and then disputing all of the transactions. You know, that's not something you're supposed to do, but essentially it's someone who's misusing the credit they've been granted. And what we found, you know, in my work as a data scientist in fraud, and specifically here at Petal, is you really need different types of defenses for all of these things. The first two, synthetic ID and ID theft, are more about verifying, one, it's a real person. We've listed some different defenses here. Or on the ID theft side, verifying that all of these things match together. I know, you know, we work with Experian, and there's quite a few products that you all have, Kathleen, that verify someone is who they say they are, not just with their PII, but also some of the device characteristics they have, their IP address, where they're coming from, and things like that to create a holistic picture. We also, you know, on the Petal side of our business, we also consider part of that someone's bank account history. And we use that to help fight the third one here, which is that first party. So if we can look, and does this person have funds to pay us back in the near future, or their credit looks okay, but they really have no money, that's a clue that they're going to take us for a ride in a few minutes here. So we really try to separate these different types of fraud, because what we're going to use to help prevent it differs from use case to use case.
Makes a lot of sense. You know, as I've been chatting with a number of our fintech clients, one of the things that's come up a lot recently is this definite rise in scams. And I'll share a story. As recently as this morning, I was catching up with my mom. She's in her 80s, and she actually received a message, and she was sharing with me that she had just received a message this week from a friend back from her high school days when she lived in another state she hadn't heard from in a long time, and said, oh, you know, hi, I haven't talked to you in a long time. It would be great to connect. I've had some throat surgery, so I can't talk, but I'd love to catch up with you. And so when my mom saw a familiar name and she saw herself called by name, she wrote back and she said, oh my gosh, well, here, please try to call me. And the next message that she got back was, oh, I can't really speak because of my throat, but nephew's in trouble. And can you just share your credit card to help me out? And immediately, luckily, yay, mom, she said, this doesn't quite sound right. And I think that this might be a scam. And so definitely, though, different types, different levels of sophistication, whether it's text message, email, or other phishing means through our social media use or other apps, are definitely on the rise. I've heard more and more about folks being pinged on Venmo, because that's becoming a communication platform as well as a peer-to-peer payments platform. And so as we think about scams, and we know that they're targeting online digital fintechs and engagement, what are you seeing, and what are some of the kinds of tools as you look at this landscape and these prevention methods? How do you think we should be coping with scams? I'm just wondering if maybe some of the behaviors that you're used to seeing as you look at more data might be helpful here.
Yeah, I mean, the first one that I'd hit on is kind of a comical one, but we have a kind of a running joke in our current company that We're a relatively small fintech, and everybody knows Jason, our CEO. And Jason apparently really needs a lot of gift cards. We get just about everybody in the company gets a message once a week that Jason is in desperate need of gift cards and they need to come quickly. Now, why he needs to use so many Xbox gift cards, none of us can comprehend. But he apparently needs a lot of Xbox gift cards. But in all seriousness, those scams are legitimate. You talked about your mom. My dad's had similar things. I think, the defenses are really that we use are really trying to prevent, one is an education perspective of how do we prevent our members, our partners from falling victim to these. And then the second is really, monitoring someone's usage and using data science solutions, using a lot of analytical tools to find out when a transaction or a behavior is out of character for a person. So by looking at all of those different transactions that someone makes, by looking at all of the different where someone is logging in from or where they're making their transactions, you can get a much better picture of what's normal for me. And then when one of your members or customers does fall victim, because like I said, it's probably inevitable. We're all going to do something silly one day because they're getting much better and better at it. The last message I got from Jason about gift cards was way better than the first one I got. Yeah. But being able to, us as service providers, as fintechs, as lenders, be able to look at all of the data points we have and create a holistic picture of, Kathleen's not the person who normally buys a ton of gift cards. This looks a little out of character. And again, if we can relate that back to them, I'm trying to protect you. I'm declining this transaction. I'm reviewing your application because it looks suspicious in the context of what you normally do. Consumers still aren't going to like it, but they're going to understand it a little bit better. So,
I like how you, go ahead.
No, I was just going to say, we try to use really that holistic picture of someone's transaction, what their spend is, to help defend our members against some of these attacks. Sorry.
Yeah, no, please. I really like how you're talking about, is this characteristic of me? Would this be normal for me? Because that really gets us into this notion of identity, and where I think traditionally our identity are the things that we think about for KYC or for those types of traditional offline identity elements that frankly don't change that often, right? So we have those solutions to verify whether this is a real person that exists. Do this social security number, name, date of birth go together? Is that a real person? Is one aspect of it, but that's kind of our offline identity, and that's one dimension. At Experian, certainly we recognize as we move into this digital world, as we move into the new ways that we engage, the definition of what is my identity is rather dynamic. Not only do we have digital elements, right, of our identity, those things can change too.
Yeah, I think that's really important to note. It's funny that you bring that up. I was talking to my daughter yesterday because she's going through this crisis of, for a teenager at least, she's been doing this aerial gymnastics for many years. And she's kind of at the point where I don't know that she really loves it anymore. And she was like, but this is my identity. This is who I am. And I'm like, well, no, it's something you enjoy doing, but who you are is someone who likes to be active, right? And so I think for too long, we've considered the things that you do or the places you are as definitions of your identity. But what your identity really is I'm a person who, lives in the San Diego area. The fact that I live on the street that I live on, that could change. The fact that I have my phone number or even my name, those aspects can change. But where I log in from, when I usually log in, the types of transactions that I make, those are going to be much more long lasting over time. And, the fact that I do it in Poway, California is what I'm doing right now, but that might not be permanent. So we really need to look for those things that are more patterns and behavioral patterns of an individual because that is their identity, right? That, you know, so I told the story about my daughter because it's very similar. What she does is the aerial acrobatics, but who she is someone who likes to be active and go out and do things and things like that.
Yeah.
And I think it's similar in how we, yeah.
Yeah, it's preferences, behaviors, profiles, and those things may change over time. Our location changes as we go about our day, as we go through the year. And so I think we have these dynamic aspects of our identity, but that doesn't mean that we can't figure it all out. I had just last week someone asked me to talk a little more about machine learning. How should we think about machine learning and its applicability for fraud? I think just what we've been talking about here in terms of recognizing that identity is dynamic, identity is multidimensional, recognizing that it's going to change over time, and then predicting what's an anomaly versus what's not seems tailor-made for an AI or an ML type approach.
I completely agree. You know, I've been doing data science in this area for over 20 years. And one of the first places I worked was FICO. And I think a lot of people are pretty familiar with FICO's Falcon solution. It's the transaction fraud monitoring tool that they sell. But you know, FICO was using what we now call machine learning and neural networks back in like 1997. So this was kind of the first commercial application of what we now call machine learning and what we now call data science, was to fight fraud, because all of those techniques are really, really good at needle in the haystack problems, of which fraud is the perfect example, right? So
that's right. Yeah, absolutely. A needle in the haystack is a really great way of describing it, because most of the transactions, most of the consumers are good ones. So how do we distinguish the fraud needle from the haystack of those that we want to engage with and that we want to have help us grow our business, that we want to build that trust with? So like you said, I think those are the right techniques in terms of how we think about this going forward.
Yeah, I think people can be a little bit shy about using some of those techniques on the credit side, and that's understandable. There's more regulatory scrutiny and things like that. But it's becoming pretty commonplace to use extreme gradient boosting or random forests or deep neural networks for solving these problems. And in fraud, not to say that there's no regulation, but it's certainly not as strict as it is on the credit side of the house. And we have to remind ourselves that this is the perfect application of this tool, is to help us discern all of these good customers, because my human brain certainly can't. But some of these algorithms, that's what they're built for, is to discern that fraudulent, very rare behavior from the legitimate behavior that varies a lot, but is way, way, way more common.
So Brian, you raised a good point. And as a practitioner, I'd love to hear your thoughts, because as you know, at Experian, we build a lot of these machine learning models with and for our clients. We provide a lot of data and sandbox capabilities, both for fraud and for credit, for our clients. Whenever there is going to be some sort of loaning event or establishing a credit line or even a limit on a credit card, we do need to take care. We do need to make sure, for audits, for regulation, that these are fair and really that the models are explainable. As a practitioner, what do you recommend, or what do you see that's been most effective in trying to make what might feel like a black box model more explainable and usable for some of these kinds of use cases?
I think that the key thing that I'd hit on is experience. So, the key to solving fraud problems to me is really having a team of people that have experience at solving them before, whether that's internal or you work with a vendor like Experian. A team of really educated people who've used this data, who've looked at it before and known what some of the pitfalls can be, is really, really useful. I know you all at Experian have a couple different patents on different methods for explaining some of these solutions. And that is really useful, not in the context because You have to give a reason code and a reason for declining someone in fraud. But you might want to know which of these different types of fraud it is, so you can apply the right operational outcome or operational friction to prevent the fraud from occurring. So to me, experience is the number one thing, only because whether you work with an external partner like Experian, who has a lot of deep subject matter expertise here, or you have someone on your staff who's done it before, you really need to understand that data, because there are a lot of fraud vendors out there, and we definitely don't want to discriminate against any protected classes or even appear to be doing so. And this is very complex, and there are a lot of attributes involved. So it really pays to me to work with someone who has that experience and that deep bench of people who can work on these types of problems.
That's a great point. Thank you for sharing that. You know, as we think about those practices, and as you build these models, what I hear over and over again is we just want to get our hands on more data. And especially those who have built strong in-house teams of experienced, sophisticated analysts, statisticians, data scientists, they always want to be able to see what are more pieces of data. And Experian has some. We have third parties that we work with where we can link that data and really get that bigger picture of what someone's full identity looks like, and whether that's for a use case where it's in marketing and making sure that we're finding the right individuals and recognizing them when they engage with the brand, to being able to offer them some line of credit from our clients, or engage with them to open a new account, or helping our clients then recognize them when they come back. So much of that comes around to having enough data to get that identity right with clients. So in Petal Card and in the clients that you're helping with Prism data, what does it look like when you get that right? When you have confidence in the identity and all of those dimensional aspects, what does that look like for the consumer that's engaging with Petal Card or with one of your clients?
Let me step back a little bit and say what it looks like from our perspective, and then talk about the consumer, if that's okay. So I think I'm going to start at the end kind of result, but it's really kind of the beginning, because I view this as a vicious circle. But kind of the first and last thing you need to do is a really good operations staff. So if I can't differentiate, we still have these three different types of fraud on the screen. If as a data scientist, I don't know, I just know this fraud occurred, but I don't know if it was synthetic or first party or ID theft, it's very hard for me to build a model that's going to identify all three. A fraudster who's stolen an identity is certainly going to apply with a whole bunch of different times and attempt to monetize that identity. A first party fraudster is probably desperate for credit and is going to do the same. But a synthetic ID fraudster is probably not trying to apply for a whole bunch of credit, at least for a while, because they're trying to raise that fake identity's credit score. So having an operational staff that identify these different types so that I can build a model that will target these different types is kind of the first key. Having an experienced staff or a partner that you work with and kind of outsource your model building to is another key. You really need to understand this data. And then what that will allow you to do is, to the consumer, that perception is then, when I'm interacting with you, you already know about all my behavior. You already know about all of the transactions that I make, what my behavior normally looks like. You can know that because I've gone through friction X, Y, or Z, or not had to go through it, that I'm not a fraudster, and you can offer me better products and services. So you make it the true consumers life a lot easier by doing all of this work in the background.
That's fantastic. Yes, I think that is a great example, and it helps you re-recognize when that consumer comes back for account management or for wanting to do some sort of new transaction. And especially if one looks a little bit odd, like someone who's been scammed to suddenly wire transfer a bunch of money where they've never, ever in a long time of being a customer of yours even sought out such a transaction. Doesn't mean by default it's fraud, but it certainly warrants additional validation and verification so you can help them through those next steps.
Exactly.
I think it's a great way to describe those best practices. I want to remind folks that if you have questions, you're welcome to drop them into the Q&A box. We've reserved some time at the end for those who have some questions. One that I see there that has come in already says, what can lenders and financial institutions do to review their existing portfolio and understanding maybe the mix of the different types of fraud, like the ones that you shared with us, Brian, might already exist on their books and perhaps have just not presented themselves as fraud yet. This is certainly a service that we offer at Experian, being able to look back and do a retro and in a batch style way, give you an analysis of what kind of risk is already sitting on your books. I know in past experience, Brian, you have experience in doing that as well. What's best practice?
Well, I think on the existing, you can learn a lot from the existing book because you can help prevent new people from, if you have a fraud problem today, you can help prevent your new acquisitions from having the same fraud problems by studying your existing book. So whether it's going back and doing a retro and analyzing some of those tools that are available, or looking at your portfolio today. I know Experian has a really useful synthetic identity score. We've been toying around with it on the pedal side, trying to see how many of these people could be at risk of being a synthetic ID is something that we're looking into on our pedal card business. Also looking at doing things like forcing our consumers to get an OTP or verify their identity, verify their income or their address on a quasi-regular basis helps us to make sure that we're paying attention to who they are. So one, if I get the piece of information about where are you logging in, you verify your identity on a regular basis, I get the pleasure of knowing, hey, this person might have moved or their financial situation might have changed, but also I can now monitor everything they're doing in the background. Or if this person is unable to verify anymore, that can highlight or alert to me that something might be wrong and I might need to queue this person up for review, even though they're already here.
And for your good consumers, it's a touch point, isn't it? It's a good way to kind of build that engagement again, and maybe that's going to enable you to make an offer or just build some more trust with a further engagement touch point as well.
And I think on the first part, that's about identity and synthetic, but on the first party side, it's also important to look out for that bust out activity and highlight it before the person uses up their entire credit line or before they decide.
Why don't you explain? Why don't you talk a little bit about bust out, Brian? I'm not sure all of our audience knows, because we know that happens with synthetic. Certainly it's a first party fraud breakout kind of situation. Maybe just share what bust out is.
Sure. So, a common term, well, it's a reasonably common term that what we define as somebody suddenly deciding, I'm done, I'm taking advantage of this, and I'm monetizing this piece of credit that I have. So if it's a credit card, it's someone who's going to use up their line in a relatively short span of time and then not make any payments and roll straight through delinquency. Now, for some people, it's on purpose. For some people, it's an unfortunate aspect of maybe losing your job or getting in a tough situation. But either way, being able to forecast that ahead of time can help you either decrease their line, or if you're suspicious of real synthetic or true fraudsters, you can try to minimize the impact by preventing them from doing things like taking cash advances or easily liquid goods like televisions and jewelry and pawn shops.
Mm-hmm.
So maybe you restrict some of these higher risk people's spend at some more risky spend categories that you might not be able to get via chargeback rights. So what we try to do is look at credit data and that person's existing financial situation on their bank account to help identify, hey, this person's in a bad situation. It's about to get a whole lot worse. Or, hey, this person's keeping going and everything's honky-dory.
When you described,
Sorry.
Yeah, when you described kind of whether everything is going well and looking at those transactions, that's almost someone's financial identity, isn't it? We've been talking about these different dimensions of our identity. When Prism is looking at these aspects of how I transact and what's going on in my bank account, you marry that financial identity, that behavior, as part of our multidimensional identity of a consumer.
Right. I mean, the credit history is a good picture of what someone has done, but we view that bank account history as what this person is doing, a little bit more present tense. And to us, you need to couple the two things together to get the complete picture of somebody's history. We view that as, this is where this person is in their life right now, and maybe it's they have very little in their bank account, but we need to respond appropriately as a lender. Or maybe it's they're doing well, but we've seen plenty of people who they have plenty of income, but I read lots of articles that with the inflation the way that it is, there's people making six figures who are living paycheck to paycheck. Well, by looking at some of that transactional information, we can identify it, and help prevent that bust out behavior from occurring down the road, or help prevent those people from getting into as much financial distress. But by looking at that as part of themselves, we view that as part of their identity, who this person is right now.
I think that's interesting too, because looking at that multidimensional aspect and seeing with some more recency these aspects of their financial identity, you'll also be able to find those who maybe are promotion abuse or chargeback abuse, or have some chronic behavior where they're claiming the transactions weren't theirs, or they didn't order these things that were delivered. So it sounds like that aspect can also help identify those who may be fraudsters.
Most definitely. I think, but again, I'd reiterate, it's really a combination of the identity data, the credit data about what a person has done in the past, how they represent themselves, and then what are they doing. That really makes the complete picture. And, like you said before, data scientists like me, we just want all of the data. But yeah, we want a picture of all those things, because without it, you're really missing a part of this person's life that they, in my opinion, I think a lot of consumers expect us to know a lot of that stuff. So we might as well use it to the extent we can in a non-discriminatory way.
It's a really good point. We have another question that came in the queue, Brian, where the audience is asking, do you think fintechs are more susceptible to fraud compared to traditional financial institutions like banks or credit unions? It's a good question. I kind of have a point of view on that myself. Maybe I'll give it to you first. But, given that as Petal Card's part of the business, you are a fintech, and then you're also servicing other fintechs and financial institutions. Do you think fintechs are more susceptible?
I definitely think they are, at least in the short term. So I say that because I think, there's benefits that come with experience. Chase has been around for forever, right? And Petal Card's been around for like 5 or 6 years. So they just have more learned expertise amongst themselves. But I do think fintechs are a lot more nimble, right? So when they experience an attack, they're much quicker to pivot, fix something, and move on from there. So that's why I said in the short term, yes, but I also think they're able to navigate some of those things a little bit more quickly than a bigger financial institution can steer the ship. You said you have a perspective. What's your perspective?
Yeah. No, I think that's true. And we talked about it a little bit at the beginning of the hour of how a number of fintechs, at least historically, have been really focused on growth. And being VC backed in many cases, the measures of the success of the fintech have often been around growth. I think that there's been a sobering of that, especially in this calendar year, where fintechs realize that they need to also make sense of what is bad credit versus fraud, and how can they stem fraud and even first-party fraud in order to stem losses in business. With the macroeconomic winds being what they are, I think there's a heightened awareness now. To your point, there's an innovative spirit within fintechs and speed and pace of change that should allow them to adapt quickly. The good news is that there are vendors and partners who can help maybe fill in some of the gaps as fintechs build those teams out, whether they're operational and investigative teams or business strategy and fraud strategy analysts who are recommending what are those best paths and journeys to make sure your business is safe and that you continue to grow that top line the way that you want to. I think that fintechs too are increasingly going to see scrutiny from regulators and from auditors and review. I think that banks and credit unions are more accustomed to that, and maybe that's a benefit that they have in terms of understanding what's expected and not falling on the wrong side of some of those regulatory requirements.
Yeah, I completely agree with that. I think the fintechs make plenty of mistakes. They might be a little quicker to pivot, but there's still a long way to go. The other thing I think I mentioned earlier as well was, there's not as much operational maturity sometimes. So being able to distinguish, like you said, what's a credit risk from what's this type of fraud from what's that type of fraud really needs some investment and subject matter expertise that you can really only get with time.
Super. Well, I know we're coming up to the close, and David, I should probably hand things back to you.
Sure. Thank you very much. And thank you, Kathleen and Brian, for your insights that you've shared today. I wanted to ask, we've got maybe 3 minutes left. If there were any final tips, any final takeaways, you covered so much. But if there's anything you really want to make sure that your audience members leave with, is there something you could put in that category? Maybe we'll start again with you, Kathleen, and go to you, Brian.
Sure. Thanks, David. Yeah, one parting thought for me is that getting our story straight in terms of being able to fight fraud and distinguish fraud often really starts with identity. Identity has evolved over time. It's dynamic. It's multidimensional. So finding those right data and capability partners to navigate what is the new identity landscape is really best practice. And we recommend folks reach out. We'd be happy to help.
Yeah, I think what I'd say, sure. Sorry, David. What I'd say is, really trying to put ourselves in our customers' shoes, understand why we're putting the friction in front of them or explaining it to them, understanding what their expectations are of us and what they expect us to be looking at and making decisions on is really important. So whether I'm a data scientist or a fraud strategist or whatever, understanding what the consumer expects that I'm going to do to them and what data I'm going to use is really, really important.
Excellent. Very, very good. I'm afraid that's all the time that we have for today. I want to thank again Kathleen and Brian for sharing some very, very fascinating insights and information. This has certainly been one of the most informative presentations on fraud and identity that I've heard. Very, very, very comprehensive. I also want to thank our audience for spending a little bit of time with us today. I know that there's quite a lot of things that you have the opportunity to participate in online. At least want to thank you for making us one of them. We do hope you enjoyed the presentation. There will be a recording of the webinar available on the Finovate blog in the days to come, so stay checking out to the blog for more about that. You can see some contact information for both Kathleen and Brian on the screen as well. Feel free to take note of that. And we look forward to seeing you at our next webinar. Have a great day and a wonderful rest of the week.